Hello and welcome back to Only Pay. We'll be discussing about, is it profitable for the Federal Reserve Bank? Be sure to watch all the way to the end. The Federal Reserve Bank has found itself as a center of attention in recent months. What with everything from money, printer, memes to the future of capitalism as we know on the line, the Fed has obviously been incredibly influential entity. But it's also something that's important people really don't know much about, or worse think. They know a lot about what they really don't. But that's okay because the Federal Reserve Bank is a bank. So the best way to get a really good understanding how it works is just follow the money and answer the simple questions. Is the Reserve Bank profitable? Now, because I hate YouTube videos, then needlessly drag out the question to get their average watch time up, the short answer is yes, massively profitable. It's actually the most profitable organization in the world after recently beating out Saudi Aramco. But don't click away yet. For starters, I need that average watch time too, but more importantly, find out how money works in generate massive profit and Federal Reserve Bank. Bank will teach you a lot about how these almost mathematical institutions actually operates day to day. So the core responsibility of the Reserve Bank is not to generate profit for its shareholders like it is for any other bank out there or other bank company for that matter. Instead, the Reserve Bank has two primary goals. The first and most important is to maintain the value of the currency that they represent, or put another way, control inflation. Second goal is to maintain a healthy level of economic growth and employment. But curiously enough, this cannot come in expense of the first goal. A year where US economy grew up 50% but price also rose 50%, but would be seen as failure in the eyes of Reserve Bank, although this is cause of very extreme example. However, this does not mean the US Federal Reserve does not have shareholders. In fact, it doesn't mean that it is single entity. The US Federal Reserve Bank is actually an organization of 12 banks spread out across the US. It was set up like this because back in 1913, banking was done primarily with the paper notes and paper records. So having central bank geographically close to different region was crucial, as allowing them to swiftly carrying out their operation when required. It was also politically popular to have a series of central banks that would each individually be compensated to the needs of requirements of their individual region of their economy. Now, as for the shareholders, who are they? Well, they being regular old banks. If you want to start a bank in the United States to loan money and take deposit, you actually need to be shareholders in the Federal Reserve Bank. Individual bank need to maintain share ownership equal to 6% of the total amount of money they raise from shareholders. This might sound like a weird rule, but there is a reason it is done. There is basically three ways that banks can raise money. They can deposit, they can borrow, or they can sell shares. Those first two options come directly under the control of Federal Reserve through the interest rate changes. But selling shares is not directly impacted by these rates because shares are not an interest-bearing asset. You don't get 5% interest paid out on Apple shares, you get market returns, whatever they may be positive or negative. By mandating ownership of shares equal to the portion of a bank paid contribution, the Reserve Bank knows that participating institutions will always have skin in the interest game. What's weird about these shares through the anyways always 6% of the value everywhere, which is interesting of two reasons. The first is that it is fantastic guaranteed rate of return, especially in the world where similar guaranteed investments are paying less than 1%. Many have lamented that this is basically a subsidy paid for an American taxpayer and paid to big banks, which is not entirely unfair. The second reason this is interesting is because this will paid out whether the Fed makes profit or not, which is not how normal dividends works. So, in way these shares in the Federal Reserve Bank kind of blur the line between typical company stocks and fixed interest bonds. Either way, this still doesn't explain how the Federal Reserve Bank turns a profit. Unfortunately, it is not simple as what the money printer meme might have believed you. You see, the Federal Reserve Bank doesn't just create money to use whatever they please. They instead carefully purchase select assets like government bond and mortgage securities with the money they create. They are also somewhat limited with who they can purchase off with newly created cash. For example, the Treasury Department of the United States used trillions of dollars worth of government bonds in order to finance stimulus spending of 2020. Unfortunately, the Fed could not buy these bonds directly. Instead, these get purchased by private parties. This could be anybody from mere mortal like you or I, but more often than but is large financial institutions like banks. Banks love government bond because they can use them as a part of reserve requirements while still earning interest on them. Not much interest, mind you, but it's better than 0% they would get holding up into the perceived cash reserve. Now, if they reserve a situation where either the bank or the government needs a lot of cash, the Reserve Bank is ready to step in. In 2020, the Fed purchased trillions of dollars worth of these bonds from banks so those banks could turn into purchase more bonds from Treasury without price of these bonds being too heavily impacted. Now, as we noted, the returns of these bonds were not huge, most of them still being under 1%, but 1% of $1 trillion is still a lot of money, especially when these bonds are being paid for with money what was created for free. Assuming a simple 1% return of investment, the $4 trillion worth of US Treasuries currently held by Fed would return $48 billion in profit per year. When you consider that Fed also owns $3 trillion worth of private sector securities like mortgage bonds, then annual profit figure balloon of well over $80 billion annually based on even the most constructive of projections. What's more is that this isn't the end of the story. Everything that we have looked at so far is what is known as open market operations, meaning the Fed is buy asset off the open market. But there are an additional revenue source that doesn't attract nearly as much attention, and that is, well, closed market operations. You see, the Federal Reserve Bank is a bank for banks. They offer deposit facilities, loans, transfer capabilities, and even cash distributions. Now, just like every other bank ever, the Fed charges fees for all the other services, and you can actually find breakdown of these charges on their website. Not that they would ever really matter to you individually. Even still, this is not small operations, and these serve bringing in $billion every year. Collectively, the Reserve Bank brought in a net profit of over $90 billion in 2020 from the open market and closed market activities, which technically made it more profitable organization in the world by some margin. So, you might ask how this is fair. The Reserve Bank gets to create money from nothing to buy up debts and then makes massive profit on those debts returned. Why are they allowed to do this? And even furthermore from that, if they create all the money in existence and then demand interest on the money and they create, won't we eventually all be in debt to the Feds? Tinfoil had said the Fed first used this money to cover its operating expenses, things like security staff, wages and maintenance on its building. It will then cover its financial expenses like the interest paid out to the banks that have deposit with Feds, as well as 6% dividend that get paid every year. After that, whatever is left over will simply be given to Treasury Department. In 2020, for instance, the Fed sent back over $88 billion. This effectively makes the Fed more of a control mechanism in the circular flow of cash between households, the government and the financial institutions, which is not quite as exciting. as stories of world domination, but it is effectively all they are. Now, if you were hoping for high finance with a bit more excitement, then you should go check out our video on the evolution of banking sector and explain briefly. If you enjoyed this video, don't forget to hit the like and subscribe, and be sure to turn on the bell notifications so you don't miss any video just like this one.